Welcome to another video by the Market Maker SA. I hope you guys are doing good. I hope you guys are doing great. I hope you guys are trading strong. And yeah, welcome to another video, guys. Welcome to the new month of October, of course. Before we continue, don't forget to like, comment, and subscribe. Don't forget to hit that notification bell icon to be notified in case we drop another video. So without further ado, let us begin. So today we'll be looking at, obviously, this being our new week preview. We'll be looking at a trade that we took in the morning. We're gonna break down why we took this trade in the morning, and we are going to identify exactly where our targets are and where our risk is, of course, and then eventually, when the trade is complete, whether we have take profit or either hit our stop loss, we're going to share what happened and how the market really worked, how it ended up playing out in the trade. Without further ado, let us begin. So today we'll be looking at not Euro USD, but we'll be looking at GBPUSD. Now this is quite an interesting trade, as well, we saw it in the morning, woke up in the morning, took this trade absolutely directly, and basically once we identified everything that played out, we identified the points of interest and everything basically was working in our favor. We took it, of course, and now we are waiting, of course, to see what's going to happen. But so far we are in profit. So yeah, let us break it down. So obviously this is something that I've been looking at for a while, especially with GBPUSD right now being in a sort of interesting area in terms of the cycle. See right there, we had a peak formation low that happened in weeks before, months even, and so far we had the market going in an uptrend, completing our level counts, of course, that being level 1, level 2 that got violated, level 2, and completing our last level of job alongside with a few violations, but nevertheless it was complete. Market gave us this peak formation high long time ago, by the way. Market dropped for that first leg drop, and market finally came back into this rally based drop supply zone. Market finally came back after months, 2 months, I think 2 or 3 months of market accumulating liquidity, market taking it back, market taking out all those people who were selling early. Of course, we were in there at some points, but we were out immediately. But you know, those people, them long-term traders, them long-term holders, them long-term swing traders. So anyways, we identified market came into that peak formation high last of last week, and we started working from there. And so far we never really identified any points of interest until that point, until we identified market creating this rally coming off this area right here. If you go into the H1, of course, it's much more interesting as why we plotted this as a supply zone. As you can see right there, market came to that area right there. That not this one. Market came into this fair value gap right here. You see what made this a fair value gap is, of course, the fact that there was no up candle order block right there on top. So in this instance, the market has to come and fill this imbalance void, but also use it as a fair value gap. And you see, market came in there, raised away, ran away, but then market created that supply zone right there, that being our rally, our job based drop, coming back for the continuation. So as you can see, it took quite a while until market finally came in last week. We still didn't trade because we were still not sure about it. You can see right there, it was messed up with our 5200 cross with a 200 bounce back. That is what gave me even more confidence to take this trade today. And you see, when you drop to your H2, we had this first leg, second leg, market dropping, taking out significant structures and liquidity areas. You see right there, we go, is one right there, taking that out, making that our break of structure and change of character. And as you can see, what happened there is that market then came back further to fill this supply zone right there on top. You can see, because that was the area that was responsible for breaking that structure right there at the bottom. You see what market did, they've dropped onto H1 for us to identify our points of interest. I identify my points of interest first. I started with the H2. As you can see right there, the H2 market came to this area. However, this area was a bit confusing because of this up candle order block right here. But the thing is, there was only one up in all the time frames that we look for. There was only one up candle order block. So that was the interesting thing. Then you drop down to your H2. That's the only up candle order block that we identified. But the interesting thing is when you go to your H1, you didn't identify your peak formation. You didn't identify your fair value gap right there. With no up candle order block, because that the last candle before the drop was a bearish candle. So that's very, very interesting, making this one invalid. So as you see, the one market did, the market came into that fair value gap very, very nicely, of course, giving us our let me just fix that nicely, our accumulation, you can see right there, manipulation right there, and our distribution going down. So that gave me even more, it intensified the confidence of this trade even further for me to take. So as you see, when I went into the market in the morning, I identified this gap right here, market coming there, covering this, filling this gap a bit, filling that breakup block right there, coupled with this safety trade right here, and market was dropping. I took the trade immediately, coupled with all those confluences that we looked at right now. You can see right now, market currently we're in profit right now. Market dropping very, very nicely, dropping down to M15 right there. As you can see, there's that up candle order block right there, base drop. Market is dropping very nice right there. We took our risk right there, as you can see, for $10, that being our risk, and you can see our risk to reward ratio. Take profit is right there on that break of structure, which is $56. So we right now, this trade, our risk to reward ratio is currently 1:5. Just enough space for market. There's enough space for, in case market turns on us, we will be able to come out with fairly a low loss. And if market goes in our favor, we'll make a huge profit. You can see as the market goes on, we'll add on to this trade. But that is basically it. So right now we're currently waiting. I assume I would like market to drop, take out this area right here on the bottom, this structure right here, take it out to give us even further confidence of where the direction is going and if our bias is correct. But obviously then I expect Tuesday to be a bit tricky. Hopefully some sideways movement, a bit of manipulation to the top and then dropping down, maybe finding a point of interest right there that was created due to this break of structure right here. And then Wednesday, Thursday, Friday, I'm expecting market to take out these areas and these areas, using them as areas of liquidity, and market finally taking out my take profit. So that is basically it for this week, guys. Thank you guys for watching. We'll be uploading very, very frequently this week, possibly every day, hopefully every day. Don't forget to like, comment, and subscribe. Don't forget to share to your friends. Tell us where you are watching from. And yeah, guys, thank you guys for watching. I hope you guys learned something here. And yeah, thank you guys for watching. Don't forget to like, comment, and subscribe. And yeah, see you guys on the next video. Goodbye.